The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, welcome everybody. Good morning, boys and girls. I'll be happy to report that all of the world's troubles have been fixed. We'll be getting some news from probably Greece that everything is going to be okay over there. And pretty soon China is going to have everything fixed up. It had a big rally in China last night at 5%, up 5.7%, but they forgot to tell you that half of the stocks have been closed for the next couple of weeks because they're not able to trade. So what do? They halt trading the day before they have the largest rally they've had since that 7% up move before the big move down. So there are big problems over there, boys and girls, any way you look at it. If you're a technician or anybody that can think and walk and chew gum at the same time, you realize that there's got to be some serious problems over there. They've not allowed any of the officers of companies that are listed on the stock exchange to sell their stock for 6 months, and anybody that has over 5% also is limited to any sales at all. The Hong Kong market broke quite a bit, down 7% the day before yesterday. It rallied back somewhat yesterday. They have a typhoon number 8 over there. They go all the way out to 10, but boy, 8 is it's a scary one. So there'll be a no work day in Hong Kong today and tomorrow because of the typhoon. Now, the first chart that what I'm going to do here is I'm going to walk through the interest rates first, and then we're going to do some gold and silver, and then I want to look at the stocks to show you, why this rally was not unexpected. With the bonds making a pretty significant top here. I posted the German bond in here, which is a very, very large traded thing in Europe. As you can see, we made a perfect Gartley pattern up here yesterday. We'll look at the notes and the bonds too, but we just want to look at this German bond because it's so heavily traded in Europe. You can see back in May we made a really nice ABCD. That led to the 1.618 expansion, and then we've rallied up to the 786% retracement, and that's what we've done over the last month as we've had that rally. And now, if we take a look at this pattern from a little bit longer perspective, and if we think that rates are going to go higher like we think they are going, if we add to this what could happen in the future, we will be looking at a potential three drive to a bottom pattern forming at that point, and that would be something that looks real interesting. So, whoa, we've got a first-time caller from Oakland, California, one of my favorite places. Peter, are you there?
I'm here, Larry. How are you?
I am good, sir. What can I help you with? This is your first time calling in?
Yes, it is.
How's the pressure? Okay? Not under too much pressure?
No, not very much at all. As a matter of fact, you make it quite easy.
Well, let's hope so. What can I do for you, my friend?
I just had a question as to how you have dealt with gap risk in the past, and any words of wisdom for us new traders.
Okay, just remember that the Mexican word for gap is cuidado, and that means danger. And gap is a huge danger. You have to handle them very carefully. The reason for that is a gap occurs when usually there's a change in economic thought. In other words, there's a crop report, some news comes out of Greece unexpectedly, some news comes out of China unexpectedly. You'll see these gaps, and they extend the leg that it's in. Like if it's in a CD leg or an AB leg, it will extend that leg probably a lot farther. I recommend staying aside from gaps, unless you're on the right side of the gap. That's a wonderful thing. If you're long and it gaps up, if you're short, it gaps down. those are okay. But to enter a market after a gap, the best thing is probably to wait a day or two. You don't really need the extra risk. And I noticed in your question when you called in about gap and risking, and it's all about risk, Peter. So it's just not worth the effort to try to be a hero and catch a falling knife or something like that.
Well, I understand that aspect of it, but what I'm talking about is if I'm already in a position, and for instance, yesterday was a perfect example. I was in a position, I was long, and I set my stop at break even. And then yesterday morning when the market opened up, my stop had been gapped over and went south and never looked back.
But you should have been filled, though, correct?
Well, I was filled at the market way below what my original stop, what I had intended my stop to be.
Yeah.
So I guess that's an aspect of risk that we can't control. But
No,
how have you dealt
we cannot.
with that in the past?
And I assume you were trading a market that was closed at the time, like an ETF, and then when it opened, they hammered
Correct.
you. Yeah,
Correct.
that's a problem with ETFs is they don't trade around the clock. You know, the futures and the Forex and stuff do, so you can protect yourself that way. But that is a inherent market risk that you have to take when you're trading ETFs, you know, to worry about that. But, you know, those are the that's just the nature of when the market opens and when the market closes. So there's not much you can do about it. How bad of a slippage was it?
Well, I had lost, I guess it was about 50 cents on the particular vehicle that I was in, but that represented more than I was trying to limit my loss to 1%, and the loss came closer to 5%.
Yeah, that's unfortunate, but there's nothing you can do about that because when the markets are closed, you know, you have no protection unless you can hedge yourself in the futures markets or something like that. And that's an inherent problem with ETFs and why I don't like them. You know, you watch silver and gold ETFs, and sometimes they don't even look like the gold and silver charts.
Right.
And I understand what you're going through, but there's nothing else you can do about that. I'm sure you've had situations where it's been the opposite, where it gapped in your favor, haven't you?
Well, it has, and as a matter of fact, at the close of the market yesterday, I did notice the VIX was quite a bit higher, so I entered a long position at the end of the day, and we'll see what happens when the market opens up. So I keep my fingers crossed anyway.
Okay, and keep your stop working too, no matter what.
Yes, absolutely. All right, thanks, Larry. I appreciate it.
Thanks for calling in, and call in again, Peter. It's good talking to you.
You too. Take care. Bye-bye.
Okay, you bet. Okay, we'll move on here, and we've just covered the German Bund, and so the next thing I'd like to do is to cover the Treasury notes, because that was one that we've been watching real closely. We had the same type of a pattern in the Treasury notes and the Treasury bonds. We'll do the notes here because that's the biggest market of all for futures here in the United States, and you'll see here that we've had a situation here where we've had the Gartley form also. I haven't drawn it in. I'll be darned. Oh, I know what it did. It turned it off. Hold on a second here. And yeah, there we go. We went right up to the 786 yesterday, and then it's starting to sell off a little bit here. Now, here's the same situation here, that if we get down below the 124 level, we'll be looking at much higher interest rates and much lower prices in Treasury notes and Treasury bonds. There was a Fed meeting, I guess, and I don't know if they made any commitments or anything or not, but the rates are going higher, folks. The notes and bonds are already telling you that. It's a question of when the Federal Reserve decides to come in and join the rest of the party. Whether they do that now or later, remains to be seen. So we'll just give it, a little bit of time to see what's going on with some of these things. Now, the next one I want to look at, of course, is the Treasury bond. If you'll give me 1 second here. And I want to do the September bond because it's much easier to see, and I want to be able to put it up on a 4-hour chart, 240 minutes, and you'll see that same pattern that we saw in the that came in at just a little above the 786. Hold on 1 second here so I can put the exact number in here and you'll be able to see it. But this is another one that was set up, relatively nicely, getting ready to, and that was one of the reasons that we had a little bit of a suspicion that stocks might have been a little bit overdone. And the U.S. stocks were down virtually nothing compared to the what was happening, in the other parts of the world. So this was a good thing. And the real key, if you want to see something really interesting here, folks, I know you'll enjoy this, because I was certainly watching this very, very closely last night, and that is the German DAX. Well, we were getting hammered yesterday. I want to put this up so you can see it real closely here. What I'm going to show you now is the German DAX going back the last 5 or 6 days after we gapped down. You see we had to rally back. We went down, we made a lower low on the 8th by just a couple of points and stopped there. That's when we had our big down day. And yesterday we went down and matched that low in the New York Stock Exchange Index. NASDAQ was a little off. S&P almost made the same low. But as you can see here, the German DAX could only make a 61% retracement, all during the time when we were down, 260 points. I mean, this was really an amazing thing, and it held the 61% retracement twice. It had a really big rally over 100 points and then back down 100 points, stopping again exactly at the 61% retracement. And what did it do this morning? It gapped up above the previous day's high, which, as you can see there, and it pulled back down to, you'll see that black line, which is the 20-minute line. It stopped right off that trend line, and that trend line was exactly 382 of the low from July the 8th, yesterday. So that was the key, and that ABC measured up to the area of the 1.618 expansion. As you can see, it went through there, very, very fast with a real wide-ranging bar, which told you that it wanted to go higher. Now, we've actually gone in and filled the gap, or started to fill the gap, from way back on July the 6th. The high on July the 6th in the DAX was 10,997, and we hit 10,002 to 03 today. So we went into the gap area, and I think that's relatively important. Now, the 61% retracement of this whole move down over the last 5 or 6 weeks in the DAX comes in at 11,046. So we could easily make that. But folks, what we're seeing here is a snapback rally, in my opinion. Everything that I look at, oh my gosh, I mean, I've been bearish for a while, and I'm not as bearish as I was yesterday, but we're having a little bit of a rally, but that's all it is. I mean, it's nothing more than a short covering rally. We've got such negative charts across the world. If the stock market makes new highs from here, I should really get another job, honest to God. I mean, that's how bad it looks. I mean, you look at commodity prices, look at the price of copper. I mean, that thing is made at, okay, maybe it's made a double bottom. I don't know. There's a possibility of that, of course. But frankly, it's a very, very small possibility, in my opinion. So I'm just saying that it looks pretty negative out there. So, be real careful about being consumed by this bullishness that we might get over here in the next few days. We're going to take a little break here to pay a few bills for Tom O'Brien, and we'll be right back after these few words.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we have a caller from Miami, Florida. Dan, are you there?
Yeah, I am. How you doing, Larry?
I'm good, sir. How are you? What can I help you with?
I had a question. I've heard you say 1,000 times Dow 30 is cap weighted. Excuse me. I like to trade the Dow futures, the YM30. How would you approach trading that? Obviously, the top stocks like Goldman and IBM and et cetera. Would there be a tip? Or
yeah, well, it's not cap weighted, Dan. It's price weighted. That's the big difference. You see, the higher the price, like a stock like Goldman Sachs and Nike and Starbucks and those expensive stocks, way up, and stocks like Hewlett Packard and some of the others are,
correct,
much lower. In fact, they'll probably.
Sorry, that's what I meant. Correct. Sorry.
Yeah, I understand. Yeah, I get it confused all the time, and why they do it that way, I don't really know. But frankly, it's a good thing. It's a good one to trade. The Dow E-mini futures is very, very good to trade. It's not quite as popular as the E-mini S&P, but the value of the points is a lot different. It's only $5 a point as opposed to $50 a point, so it's a good one to work with, but it follows the numbers very closely. So I think it's important. Now, we have broken below that March 13th low, and to me that tells us that we're in a pretty bearish scenario, but we're oversold here because we completed an ABCD pattern in the Dow Jones index when we went down the other day. That was one of the reasons that we thought we could probably have a little bit of a rally. I'll post that into Tiger TV so the folks can see it. But we've got a gap up here, another 150 points higher, and I think that will be the area where it's going to have some serious trouble. But we're in a downtrend in stocks, Dan, as near as I can tell. So I'm just looking to see if we get into an area where we're going to have, a place to sell it. That's what I'm looking for.
My question is, I understand the Dow 30 is price weighted. I heard you say that 1,000. Is the YM also price weighted too? I assume yes.
Yes, the YM is basically the well, it is exactly the same as the Dow, just the E-mini version of the Dow. They've never had a Dow futures large contract, as I remember. I could be wrong because I don't trade it very often, but that's basically what I'm seeing.
Okay. If you get a minute, your prognosis on Apple too. It seems.
Sure. Yeah, I'd be happy to. I'll be happy to post that in there so you can take a look at it. Now, Apple yesterday came down and finally hit this target that we had been looking at for a long time, down at the 122 level. We're trading around 124 right now, and Apple up about a $1.50. That completed the ABCD from back in June 1st. It was also another 382 retracement. That's the second one. We had one way back on the 9th of March, and then we had another one yesterday. So this market also was oversold, and it should be should have a rally at least up to the 128 level. That's what it looks like for me. But we've been going sideways in Apple since February. It's really gone nowhere. It's stayed between 134 and 122, which volatility. I mean, that's nothing. That's a very, very small amount.
It's stuck in a range, it seems.
Yes, it certainly is. I saw something today that the sales for the iWatch were down 90% or something. I don't know what that meant, but I saw an iWatch once and Apple Watch, and I don't understand why you have to be a real techie to want to buy something like that.
Well, it's pretty pricey watch.
Yes, indeed it is.
Okay, well, that was my question. I appreciate the help. Thank you very much.
It's no problem. Call in anytime, and it's always good to hear from you. Thank you, Dan.
Bye.
Okay. Folks, tomorrow we are going to have our friend Bill Meridian on from Vienna, Austria, of Cycles Research. He was the one that was alerting us to the fact that there could be something really nasty happening in July with his July panic cycle, and it certainly tipped its hand, to start off to see what's going to happen. We have looks like we're going to open really strong here in stocks this morning. Again, the numbers that you want to watch for the S&P are the 2082 area, 2085. That's up into that gap area, and that's what you'd want to be keeping an eye on. So. That's just 2 cents from the bleachers, so we'll see what's happening when the market opens here. We're going to have to take a little break here in just a few seconds, and then we will see what the rest is. We've got gold and silver pretty strong, which we will cover when we get back from the break. So we'll be right back after these few words from our sponsor.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative market-safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year market-safe power metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to take a look here at the stock index futures because the talking heads are in there buying like crazy this morning, and as they've done many times before on the opening, so we'll see what's happening. We've got a interesting resistance point. We've taken out the high of July the 8th, which was yesterday's high, and now we're approaching the 786 retracement of this move. Usually in bear markets, you're only going to get a 2 or 3 day rally. We've been rallying since July 5th. You can notice we've made higher bottoms on the 7th, again on the 8th, and now we're coming into this 786 retracement, which we're coming in so fast. My assumption is we're probably going to break out above that, and that's what gives us this target area that I'm looking for in the S&P, which will take us up into the 2080 area, just exactly, almost exactly at 2082 is what I'm watching for. It might not happen well, it could happen today, but that would be probably an all-time record day with the Dow up almost 200 points already. we would probably getting pretty close to that. So remember, if you'll remember back on the 7th, we rallied 40 points in the S&P, and then we came down and matched that low again yesterday. So remember, any market that can give you 40 points can take 40 points away from you. So keep that in mind. But we've got a very, very strong market right now. The Dow is up well over 200 points, it looks like. And so we're pushing up against those really strong areas of what I think there will be resistance up around the 2070, 2069 level in the S&P. But they're happening so fast that you got to give it a little bit of show it a little respect. But we're in a downtrend as near as I can tell. Remember, the high on this contract was 21.34, so we're just rallying back a little bit, correcting a very oversold situation. And now we'll see what this next rally will be. I personally don't believe anything is going to happen in China. I posted a chart here into Tiger TV showing you, in fact, as I posted that chart in yesterday also, that we were making a 50% retracement on the Chinese market as of yesterday. And it had a little bit of a bounce today, but we'll see what the bounce is. But the fact that they closed those other stocks was not a very good thing to do, folks. You want free and active markets, and the people over there are not familiar with, capitalism, in my opinion. And, so that's it. We'll just have to wait and see. Okay, now with the stocks going higher, we've got the bonds selling off quite a bit, which which certainly been expecting. So we'll move on now, and we will go and talk about the gold and silver. Now, I'll start out here with the silver because it has got a very interesting pattern here. That if you'll just give me a second, I'll put it in here, because we've looked at this before, but we've got it happening again. I'm going to draw in a line here just to show you where I messed up yesterday, because with gold making a new low, you'll see it here on the bottom here, with gold making a new low yesterday, silver did not. Silver only pulled back to a 786 retracement down at the 1470 level, and had held, and now we've rallied $1 an ounce. And what we're going to have happen now is you'll notice the 220-man lines are there. Those black lines that you see, that parallel lines, how they bounced off that. We're going to bounce off that line again here at $15.60 per ounce in silver. Now, if we can get silver above 1570, that line will no longer be valid. That means that it's not going to work. And like the other one did. The other one worked perfectly, but this one might not work. So those are the things that we're watching today, is to watch silver around this 1560 per ounce level to see what happens. But when gold was making a lower low yesterday by $1, silver could only make a 786 retracement. Had I seen that, and that was before the show started, of course, but I missed that because I was focusing on bonds and, also the stocks, because we were such a critical level with those patterns coming down that we've had. Then we'll have to take a quick look at that. Now we're going to take a look at the gold, and I will bring that up in just 1 second here, and we'll have it ready for us. And if you have any questions, it's 877-927-6648, and we'll put the gold up here, and you'll see. Let's just do the. I still think we got a chance. See, I really thought gold had a chance to make 1135. We got to 1145, and I still think we got a chance to get down there, one more time. But we'll wait and see. We did make a lower low, and we'll see what happens with it from here. But you're going to have to get a really strong rally in here, well above 1195 before I think we would have any substance to get the gold running, very far. Actually, the key for me is watching silver, because if silver can get above 1570, that tells me that it's made a pretty good bottom, because that means it's broken that downtrend line that's been there, that 20-man line that has been acting as really great resistance. That means it would be failing, and that tells you that, yep, it's got more to the upside to go than what happens. But right now, you can't really touch it. I mean, You look at some of these commodity prices, folks, and boy, oh, gee whiz, they look bad. I mean, I don't care what it is, whether it's iron ore or copper or cotton or rubber. I mean, even rubber prices are, just, getting hit, really bad. And if the economy in China was really that good, you'd be looking at, a market that would be absorbing these supplies at lower levels just to build stocks. But I think that they've ran out of money. Now, we've had this Chinese debt situation where I think the real problem in the world is it's nothing to do with Greece. It has to do with the debt, both our debt, the Chinese debt, the European debt, the Greek debt. It's all about debt. There's just too much debt out there. And when it starts to come home, this liquidity factor is going to be very, very negative. I think the shot across the bow is what's happened here in China, and it hasn't happened to us here at all. And not yet, and I assume it will one of these days. But thus far, it has not happened, to that effect. So we'll have to, just give it a little bit of time to see what really happens, with this. Now, I wanted to share with you what I think is the most important chart, and I'm going to go through it again because, you pay good money here at TFNN to listen to us. And this is the best I got. I don't know if it's any good or not, but this is the best of what I have. This is the New York Stock Exchange Index. It took me 40 years to learn this, but this cycle that we broke on June the 8th tells me that we are going down until August the 24th. And the reason for that is if you'll see these two big black lines that are there, the ones from December to late February, that was the upcycle. You see how it crested on the right side. And if you look at the time between March 13th, which was the really key low that we've already broken, we've broken it twice. We broke it the day before yesterday, and we broke it yesterday, and now we're going to be rallying today. In fact, they haven't even got any prices listed yet. It's going to gap up quite a bit on the NYSE. But you see we've broken that line, and that trend line, and that low, that cycle low, was a huge cycle low, folks. It was so big. That's what got us our new highs. But it was equivalent to what happened on August the 9th of 1982. That was the major bottom in the Dow Jones. It was around 500. And that was the major bottom. It's also equivalent to the one that had on March the 9th. March the 5th of 2009. So this is a really critical cycle. So we have started a downtrend, in my opinion. If we go up and make new highs from here, I'm going to salute and go back and take a commission in the Coast Guard and go out to sea. And you know how much I hate being in boats, but that's what's happening. We should have some pretty good resistance. Usually you get about a 3-day rally. The last good rally we had in stock lasted from June 8th to June 20th. It was 2.5 weeks. Maybe we get one this much. I doubt it because of what's happening in China. And we'll get some good news out of Greece. I don't think there'll be any surprise there. I mean, they're not going to let Greece go down the toilet, is my guess. But maybe they do. That's not the problem. The problem is in China. And in fact, Asia. I mean, Hong Kong's having the same problem. Even Japan is having the same problem. Japan's government has been taking all this stuff, and been putting it into the market, along, propping it up. So we'll see what happens. So that's what I'm looking at right now. Okay. All right. Now, the next one I wanted to cover, we've covered the gold, we've covered the silver. I wanted to spend a few seconds here. Well, not a few seconds. I want to talk a little bit more about crude oil here because we have a very interesting pattern forming in crude oil. We've had everybody bearish this market for a very long time, and we're in the midst of a nice little rally here. We came down to the 50-40 area, which was not too much of a surprise. The fact that the market was so oversold, it was a perfect Gartley pattern at that point. And now we're forming an ABCD pattern that should take us up to right around 53.82 to 54.15, around $54 a barrel is what I'm looking at for some pretty good resistance. And this is just a 15-minute chart. If we look at this on a larger stock, on a larger time frame, you'll see here, we'll just put this in here because I've had this stuck in here for a bit. I have to delete a box. You'll see where we are here. This is just a minor ABCD correction in crude oil. I would, look very closely to find a place to be a seller in crude oil, because this is a really nice ABCD coming in here. If we get it up in this area of around 54, 53.82 to 54, right now we're trading at around 53.15. So that's primarily what we're looking at. So let's see, we got the Dow up a couple hundred points. S&P's up, looks like about 24, 25. And we got the NASDAQ up about 50. So we're having, a pretty positive day across the board in all these things. Whether that continues or not, will remain to be seen. You can't get anybody to buy it when it's down 260 in the Dow, but when it's up 200, everybody wants to buy it. That sounds like a good plan to me. So we'll see if it continues to work that way, but we'll have to wait and see. The VIX finally opened, and it gapped down over 2 points, which I'm sure our friend Peter is not going to be happy about that. But unfortunately, you can't do much about gaps, and that's we've gapped down here. We're still above the 1559 level. It's still early in the day. Whether this is going to be much or not, I don't know. But that's a pretty big gap of 2 points in the VIX index. But we'll still see what happens. This is just nothing more than a short covering rally, in my opinion, folks. I might be wrong, but everything that I look at tells me that that's what we're looking at. I want to check the opening here of the New York Stock Exchange Index, because I like to see how much it gapped up. And it gapped up, 100 and some points. It gapped up above yesterday's high, which is very unusual. We'll put this up here. Let's just do it on a 60 minutes so we can see it maybe. Yeah, we can see it pretty good here. We'll just put this in here on a 60 minute. You'll see it gapped up above yesterday's high. And but this is another one. And we got this huge gap here. Oh, my gosh. This gap that we have that starts back into the area of 10,900, and that's also an extension of which would be another 20-man line. So at 10,947, that's up 150 points from where we are now. If we were to get there, that's going to be major resistance in the New York Stock Exchange Index, folks. That will be really a big area if we get that far. Now remember, on the July 7th, we rallied from 10,600 all the way up to 10,850, and then we came down and made a new low. So just because these markets are jumping around doesn't mean they're going to go straight up. So we're just in an area where we're going to have some really serious volatility, which is, God, you have to love it. That's the one thing. We're going to cover some currencies here, especially the euro. We got a break coming up, I think, in about another minute. I want to cover the euro, and we'll see where we stand with that, and also the U.S. dollar, so that we can see, what's going on with, some of these other things that we're watching here. So let's just take a quick look here at the U.S. dollar before we go on to break time. And we'll use the ETF for that, because that's probably the easiest way for you folks to take a look at it. And we'll put that in, and you'll see we're still, we've had a pretty good move. The high we had yesterday was a 786 retracement of that previous number that we were looking at before. So that's nothing more than normal stuff that's looking at see what's going to take a look at. We'll be back, and I've got a question coming in about how do I differentiate rallies. So we'll see what's happening.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, I'm back, folks, and I posted into Tiger TV the dollar index ETF, and as you can see, we hit that 786 number on the upside yesterday. That was equivalent to the downside in the euro, of course, and now we're in the middle of a trading range. I've also posted in the room the foreign exchange euro. This is the actual, the cross rate between the euro and U.S. dollar. That's the most actively traded thing in the world, and this is my opinion of what I think is going to happen over the next few days and weeks. is that we are going to have another further correction here in the euro. If we take our low from way back on March 13th, which was that key cycle low, and then we go up to the high in May, what we're looking at here is a potential Gartley pattern coming in here in the U.S. dollar around the 106.80 level. Now, I don't think you can extrapolate what's happening to the stock market, what's happening in the euro versus the U.S. dollar, but this chart tells us, at least from my opinion, that we should be under some more pressure. Now, whether that has anything to do with the Greece of what's going on over there or not, I'm not sure. Like I've said 100 times on this show, this has nothing, what we're seeing in the markets has nothing to do with Greece. That's where the news is, and that's where you see the smiling face guy with the blazer and the white shirt and the whole bit. By the way, that guy's an absolute dead ringer from my good friend and co-author Shane Smolian. My wife and I, every time we see him, we think we're looking at Shane. So he doesn't think that, but he doesn't know because he's not looking in the mirror like we are. But anyway, this 106 area, 106.75 in the euro, we're down about 400 pips from where we are right now, but that's going to be some real serious support. Remember, the long-term weekly on this euro really is screaming that it wants to go to par. That's basically it. And if you look at this on the long-term weekly chart, you see we've been rallying now since March. We made our low at March 6th, and we've gone nowhere. I mean, this thing is headed lower, folks. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.